Hi guys, how are you? Welcome back. Welcome to the weekly update, and let's go through everything. Um, Congratulations to Biden, right? He won. Uh, sure, there's going to be lawsuits, whatever. Trump is a whiny crybaby. It's just the way it is. And if you don't think so, then I don't know what to tell you. I don't know of any grown man that behaves in the way he does. Anyway, so congratulations to Biden. We know what's coming, but we have bigger problems to deal with. The cases of coronavirus have been spiking crazy. 60. We started at 20, 40, 50, 60, 70, 80, 90, 100, 110, 120. What is it today? 129 or something, right? Positivity rate up to 7.75 or something. Some places are starting to report that the hospital is reaching limits. We have some news of a mutation. We don't know if it's bad, if it's good, don't know. But in Denmark, there is some concern for some mutation. Um, you know, we got it. We can't wait to January 20th to put a scientific plan in place. In my opinion, what's it going to be tomorrow? 140, 150, 160, 100. Like, at what point do we say, okay, guys, something is not right here? There's got to be, and that's the problem from the beginning, right? That's the problem from the beginning. At first, it was like, oh wow, we have 1,000 cases a day. Oh, we have 2,000. Oh, we have 10,000. Oh, we're up to 140, and we're still doing everything wrong, dramatically wrong. And the market is going up, and we're clapping, and we're saying, okay, everything is normal. Death rate is very low. It's all these things, but at some point, it's going to affect the markets. Forget about our daily lives, but I'm talking about markets now, and it's going to affect it one way or another. It's going to affect it. All right. So um, the market up. First, they told you it's going up because Trump is going to win. Then they told you it's going up because Biden is going to win. You cannot come up with stories and believe them, and then look at the price and say, "Oh yeah, they're right. Yeah, yeah, it's because of Trump." No, it's because of Biden. No, well, it's because of they know who the president is going to be. Oh well, you can't do that. Forget about that. Right? How good did that do you with every other piece of information that has ever come out? Right? You don't base thesis on stories, cute stories. They sound great. Remember, these guys, they're media. They have to come up with something to say all the time. But it's always the macro uh, behind everything that moves markets. Whether you're in a multiple expansion, that's macro, right? The market is moving up on a multiple expansion. What is a multiple expansion? It means that you're paying more and more and more for less and less and less earning. That's what a multiple expansion is. So in the conventional way, you would say, well, it's a PE. PE used to be valued at 6, then 10, then 15, then 20, then 25. That's a multiple expansion. And that has to do with the amount of money that has been created privately and publicly. Publicly is uh, the last piece of the puzzle because publicly indicates that the private has a problem. Otherwise, you can just lower interest rates, let credit expand, the economy fixes itself. And that's what they've been doing now for years, right? Decades, since the 80s. But once you get to 0% interest rates, right, you can't expand credit that much. Now you need public debt. You got to fill the void somehow, right? And that's what's going to push markets higher. Now, having said that, there are limits. There's always limits to everything. Nothing is limitless. Um, so you got to keep these things in mind, right? So let's get on with the analysis for now. I won't go too much more into the macroeconomic stuff, all right? But we are at limits. Okay, how long can the limits go? I cannot tell you that. Not my job. I don't have a crystal ball, but there are limits. There's always limits. All right. So we have a double top here. We have an M pattern. The M pattern is not negated by the break of the trend line. A break of the trend line in of itself doesn't mean a whole hell of a lot. It can, right? It can, and something that you guys should, the ones that have been following me in the past month, you should know that you need some kind of a consolidation, some kind of pressure to build, and then shoot higher. Okay. You also know that potential areas of reversal are previous highs. Okay. It's not, oh, it broke the line, let's go out and buy. If it was that easy, we would all be billionaires. It's not the way it works. Previous highs do matter. We can literally come all the way to the top here. One second. All right. Because this is where everything comes into play here. You can go all the way to the top here in price, and you will still have an M pattern, a double top, whatever you want to call it. I don't care. You still have a formation that is bearish. What if it goes higher? Still bearish, and I'll show you why. Okay, I'll show you why. How it gets there is what matters. How you take the long trades is what matters. Okay, but let me show you. If price was to go like this and then fail, what do you have? A rising F flag, a bearish formation, right? 1, 2, 3. Pointing this direction, next move is this direction. Okay, so the way the market is moved, this has limits. And we can measure them, okay? Now, it's different on the upside than it is on the downside. On the upside, you have more limits. On the downside, not so much, because the downside is a different animal, completely different animal than a bull market. A bull market can stay grinding higher, but bear markets don't behave like that, and you should know that by now. Look at this, okay? That's one big disaster there. All right. So let's measure them. And this move now in the S&P is up 10%. Okay. This move here, which is not as sharp as this one, the trajectory matters. It really matters. It doesn't mean that it cannot shallow out later on into a rising F flag. That's perfectly fine, right? That you will get something like this, and then a trajectory that goes like that. That's very normal. That's okay if you have something like that. All right, that's buyable. This can lead to this. Okay, and it's what I call a fuckery move. Okay, it shows you one thing and then does the complete opposite in a very violent move. From failed moves comes fast moves in the opposite direction. Doesn't matter what direction it is. So if we go back and measure the other move, which is a lot shallower in trajectory, you will see that it's up 10.5%. Okay. Um, Again, trajectory is different, but let's measure this one. This one went all the way up to 17, but look at the way it went up. Right? You see it? There's a thrust move, then a consolidation, then you get another thrust move, another consolidation, another thrust move, smaller, consolidation, another thrust move, consolidation, and fails. Where does it fail? Right back to this level. So did you miss anything if you didn't catch this? No, you missed nothing. You missed nothing. You could always have bought down here on a hookup. Okay, or you could have bought here. Price is an advertising mechanism. It's designed to provoke emotions. Degenerate gamblers love it. They love it. They don't see past what's happening. The market is up. Oh, the market is up. The economy is great. Everything is great. We're going back to normal. They run out and they buy it, and then boom, they get this move, and they're still holding. Okay. And if they don't lose money, they'll at least give back their profits. And then by the time it gets down here, guess what? Price again, right? The market is going down. I'm going to short it. I'm going to look at the way it's going. Right? They love action. And then what happens? Market goes back up. Right? And eventually, if you trade and behave in this manner, you will blow out your account. You will. There's no question about it. Don't be a piker. Don't be a noob. Start learning how to do things the proper way. Right? Don't let price uh, dictate your analysis. Now, it's easy when you're out of the market to understand that. When you're inside the market, it's absolute. It goes one way. You're going to be making money. Everything is going to be great. And then when the thrust down move comes, the counter trend, you're going to feel that too. And, remember, it's going to take a very, very small time frame when it goes boom, straight down. All right? And you've seen that so much in Bitcoin. I don't know if you guys have ever traded it or whatever, but Bitcoin can drop 20% in a blink and then be up 20% the next day. Right? These are fuckery moves. Remember, price is an advertising marketing mechanism. Unless you're in it, then it's a different story. So, this was a perfect example. When you go back in time and you look at this, it's great. Oh yeah, well yeah, we're going much. Oh yeah, we're going up here. Yeah, everything. Well, it's amazing. COVID was out, by the way. And I'm like, no, COVID is a problem. It's airborne. It's an airborne virus. It's a pandemic. It's what? Nah, man, it's going higher. It's going higher. Okay. So please learn. Even if you miss a trade, so what? So what? This is not when you make money, guys. This is when you make money. And, it's so difficult to explain this to people who are perma bulls, perma bears, degenerate gamblers. I'm always right whenever they feel like it. It's not the way it works. Sorry, my great coffee. So that's why I have to spend the first part of this video setting expectations, letting you understand what is happening. Okay? You gotta reprogram your mind. You have to do it. Think about this. Think about this. Since the top, since the top, how much has the market risen? 5.3%, 4%, and 4.2% where it is today. What have you missed in the past, what is it, 9 months? When was the top? March? February? March. What have you missed? Nothing. You've missed nothing. If you think 5% is reality in your portfolio, I guarantee you it's not. 100%. Only 5% of the world's investors can beat the S&P 500. So what does that tell you? It tells you that there's no way, let me change that wording, there's a very small possibility that your portfolio is better than the S&P. Chances are it's worse. So if you took your money when things were all great, January 2020, great I'm talking about, You've lost nothing. That's reality. Light up my cigarette. All right. So, doesn't matter that Biden won. Doesn't matter that if Trump would have won. You think they're going to do anything different except for the COVID? No. They will print the same amount of money. All right. So, wasn't oh, they're going to tax the rich and that's going to kill the market and blah blah blah, kill your 401k. What happened to that? All right. You can't fall victim to stories, to cute stories. You can't do that. Okay. You can't do it. So let's get a little deeper into this. Look at it on a 1 minute chart. We gapped up, broke the previous high, went straight up. 1, 2, 3. Okay, now we're consolidating here. Low volume after hours. Okay, that's what happened today. Did it do anything significant? No, no. If it would have thrust it up straight, then yes, then you can't argue with that, right? If you saw something like this, well, clearly, this thing is off to the moon, right? But are you going to buy it here? No. You gotta wait for the correction. Gotta wait for the correction. And then on the break, buy it. That is okay. That's okay. You have a structure. You have something that you can sink your teeth in. It's not, the market is leaving, buy, buy, buy. You start that, forget it. You're a piker. All right? You're a piker. Don't be a piker. Plenty of time to make money. Plenty. All right? So please listen to me. I'm telling you, in the long run, over many, many trades, this is going to serve you very, very well. All right? It's going to make you a lot more successful. So we're testing the previous high. Let's go to the NASDAQ. Broke out. Doing what? Testing the previous high. Okay? Same thing. Nothing has changed. I've cleaned it up a little bit. All right? Same thing. Small caps. Uh, Again, if you're going to short anything, it's better to short the small caps. All right? And they are what? They are slightly above the previous high, but this is not the all-time high, right? All-time high is all the way up here. Very far away. Very far away. Okay. So, sure, it had a very big move from the bottom. Very, whipsaw. Look at that. Straight up, straight down, straight up, straight down, straight up, straight down. Okay, how do you trade that? You don't. You lose your money if you try to trade that, because no matter which way you bet, you're going to end up wrong. No matter which way you go, you're going to end up wrong. Okay? Nobody has a crystal ball. So, what is it doing? Building a consolidation. How does the consolidation look? Well, to me, it looks like a head and shoulders. It's not a very nice consolidation. It is a consolidation above the previous high, no doubt, but look at the way it looks, right? Look at the way it looks. It looks like a head and shoulders. Doesn't mean it can't go higher. It's not what I'm saying. Look at the way it came up. Look at the structure up here. How does it look? Is it tradable? And I say no, it's not. Not from my experience. Maybe somebody else has much better experience than I, and it says yes. Okay, good luck to him or her. Transportations we cannot see yet. The fangs we cannot see yet, but we can see China. And China has formed exactly what I told you that the Nasdaq S&P could form. This is a bearish structure. Doesn't mean it's going to be. I'm just telling you that the structure is bearish. It's defined, it has a hook, it's got everything that you need. And typically when you have structures that are formed in this pattern, 1, 2, 3 up. They're formed. It's hooked. Yes, valid. Everything is good. Testing what? The previous high. When you have a structure that points up, the next move is down. Okay? Just telling you what the message of the market is. Um, let's take a look at where's the dollar? Dollar. Boom. Down. So the dollar is forming pressure at the below this structure here. Okay? Building through time. It had a wedgy looking formation. We could make an argument that this is all a one. It broke through time and broke this structure here. Okay, and now it's going for at least the previous low. And then we end up with a structure. Let me clean this up. Then we end up with a structure something like this. Okay, so then even if it pops and it starts doing something like this, the bias is to the downside because it's building that pressure. It doesn't have to do it. Nothing has to be done. I don't have a crystal ball, but I'm telling you that typically what happens with these structures, okay, they form pressure and then they release their all that pressure like a relief valve, like a hydraulic relief valve. And if this structure breaks, which is what it's showing, right? The structure is going 1, 2, 3 up. It points in one direction. It does the opposite. Okay. Nothing different that I'm doing than any other chart that I analyze. And you've seen the results of that on a very small time frame. US dollar Japan, okay, broke, pushing even lower. Euro US dollar broke out, pushing even higher. Great Britain pound testing previous highs, okay, but again, failed move comes fast move in the opposite direction. Okay, nothing that I'm telling you is different. Turkish lira, US dollar. The US dollar is pulling back a little bit, even in the Turkish lira. US dollar ruble. Dollar's falling against the ruble. US dollar CAD. Dollar's falling against the CAD. Okay. Look at Australian dollar beating the US dollar, breaking out. Structure at the top. New Zealand dollar pushing higher. Okay. Uh, dollar against the won pushing lower. Okay. It's I don't know what everybody's excited about, right? Why does a dollar fall? Two reasons. Either we printed too much, which we haven't printed lately, to be honest, or the economy is not performing in the same way. Okay? It's either uh, weak or weaker than other economies. There's always a mechanical aspect to it, obviously, right? That you know, you go too much on one side, and then there's a relief, and then that's also something to consider. But I don't think that is the case now. Now let's take a look at the 10 year. 10 year has bounced, right? So the structure is bearish.